Bye-bye. Hello, everyone. Hello. Hello, everyone. You guys are all welcome. You're all welcome to the third part of this webinar series. You're all very much welcome. In just a minute, I'm going to give you access to be able to see my screen, all right? So, in the meantime, while the webinar is on, I want you to, if you have any questions whatsoever, please use the Q&A section, all right? I will definitely get to all the questions by the time we get to the Q&A towards the end of the video. I'll definitely get to all the questions. So please make sure that you utilize the Q&A session, all right? So I want to welcome you all to this very wonderful part series. So please, can you confirm if you can see my screen? Can you all see my screen? Can you all see my screen? So I need to confirm if you can all see my screen. Yes. Hello, Joshua. Thank you. All right. Adeze. Very much for joining. So episode on before we get to discussing the main topic of the day, which is the part where we are going to be having a very deep look at how to get through difficult times in the market, because a lot of times traders experience difficult times in the market. As someone who teaches trading myself, and I mean, I have students, and sometimes you see the students, they begin to wonder if maybe something is wrong with the strategy, or maybe something is wrong with themselves, or maybe it's them, or maybe they are the ones not doing anything right, or all these kind of things. And trading is a very psychological business. Trading is extremely psychological. And since it's extremely psychological, there's a very, very high chance that you could actually, that it could really mess with your mind. That it could really put you in a tough mental state where you are questioning yourself, you are questioning the things, you're questioning all the things you've come to believe in as a trader. So that is actually why we are looking at today's, this is why we have this topic for today. That is how to prepare you for all the things that you will likely meet in this business along the way. All right. So now let us have a look at, if I look in front of me, what I can see here is actually a technical chart. But before we get into that, I want to quickly walk you through a trade that we took within the week. That was the first trade that I took, and I think some members of the community caught that trade as well. I'm going to just quickly show you how it played out. We had, the trade was something like this. The trade was something like this, and I think the entry was somewhere around. Let's look at this. So that's not the time frame. So it was a 1 hour entry. So it was somewhere here where we had the fair value gap fill. Don't worry, I'm going to explain that in just a moment. So, and then the entry was around 8990. It was, I think it was about a 10 or 15 pip stop loss. So this was the entry. I just want to quickly show you how we took the trade and how it ended up being a 2-to-1 risk to reward ratio. However, I entered the trade with a 2% risk. So for me, it was a 4% win at the end of the day. So this was how the trade looked like. And because of consistently, this trade was taken on Monday. And if you go through my Instagram page, you are going to see where I posted that setup, where I posted it's a picture of my screen with that particular trade. Now, this trade was taken on Monday. I want to quickly walk you through how we arrived at a trade. I don't know how many of you were here last session. Please, if you were here last session, could you please indicate that you were here last session so that I also want to know, I remember correctly that I gave an assignment. So I want to know how many of us attended to that assignment. How many people from last class are here today? And then how many people did the assignment? That is, if you remember what I did show you, I showed you how we trade, how we keep the market very simple. And the very reason why I decided to do that was so that you can see that it is something that you can easily replicate for yourself. So please, I would like to see in the chat session, please let me know, were you able to do the assignment? Did you backtest? Did you look through what we showed you? For those of you, I did mine. I was present in last class. Ifeanyi, okay, that's great. Okay, so Ifeanyi just stated that he was here last class. He did his back testing. Great. Kudos to you, Ifeanyi. Well done. So who else had the assignments done? While we're at that, I want you to remember, if you were here last class, you know why this high here. You know why we are taking a trade at this high on the close of a candle, of a certain candle of this particular first red candle. We could have taken an entry there, and this would have been our trade to the downside. I know you can say it's hindsight. However, when we missed this trade, personally, I missed this trade. I think I had students who caught this move from here. For myself, I missed it. And then when the market returned back to that origin or to the feeling of this imbalance, that was where I personally took a trade and I got out at a 2-to-1 risk to reward. I think if I'd maybe held it a bit more, I think would I have been able to catch a 3-to-1? I'm not sure. I don't think I would have been able to get a 3-to-1 on that. Maybe it might have been a bit difficult to get a 3-to-1 on that trade. But what I did bank personally was a 2-to-1. And I went in with 2% risk, like I said, and I ended up with a 4% win on my account because the risk was 2%. So one thing I want you to understand is we took this level, the market came down, and all of these imbalances, the market created all of these imbalances in price. You can see from the beginning of this candle, this green candle here, up until this high here, this last high here. This entire area where there is no overlapping candle from this to this point, this entire area where there is no overlapping candle to the left or to the right, this is called imbalance in price. This is a fair value gap, all right? So now, if we have this fair value gap, and of course, then we have a very strong price that's coming here, taking this liquidity here. Of course, whoever had their stop losses in there, the market has liquidated all of those guys that had their stop losses in there, and that is the end of their trading day. And then all those liquidity was used to re-inject back into the market, and then we fell very sharply. However, when I missed the trade, I knew for a fact that, yes, we are likely to come back into these areas and fill up all of this fair value gap. And that was why when the market closed this gap, all of this gap, when the market closed it, I took a trade to the downside. All right. Now, going forward, I have a similar projection on Euro USD. However, okay, I think it has even played out. Okay. So you can see, I think by the time I drew this in, the market was somewhere around here. And you can see the market has traded into this area as well. Something very similar. The market has traded into this area. The last low and this one here, this is a fair value gap. You can see how the market dug into that. And then we had a reaction from there. However, when you know so much of these technicals, that is not exactly all you need to do well in this business. That is not exactly the bone of contention in the business. The bone of contention is how your mind works as a trader. And one of the things I want to tell you is that as long as you are a trader, as long as you are in this business, oh, okay, this was another very beautiful example of that. I mean, I didn't even see this coming. All right, so you can see how we hit this high, we dropped, we took out this high. So it's not an accident that the market ran into this area and closed below. It's not an accident, all right? So, but I want to quickly get back to what I was trying to allude to. as long as you are in this business of trading, as long as you are a trader, I want you to know, excuse me, that you will continually run into losses along the way. You are going to have losing streaks and you are going to have winning streaks. And that is why you must not be too excited when you are having a streak of wins, and you must not be too sad when you're having a streak of losses, because it is just extremely normal within the distribution of probability in the business of trading. It is extremely normal. It is completely normal. There is nothing special. There is nothing to be annoyed about. There is nothing to be pained about. There's nothing to be sad about. You know, in taking a loss in this business. I sold you a SD card and I already taken my one-to-one already. That's coming from a CTA student. Very beautiful. The students already know. Once they see this setup, they know. For me personally, that's the entry. Stop loss above the high. And every CTA student is taught to take a one-to-one from the very beginning. We teach you take a one-to-one. So if you probably went in with a 25 pip stop loss on that trade, that's how he will take the trade. CTA 101. This is how we trade. When you bank this, you let the rest do its thing. Myself personally, I've been very much on the road. We're aggressively putting our new office, we're working on the new office. So it's been a lot of work for me. So that's why I didn't take this trade. However, one thing I want to talk about, your mind as a trader remains your greatest asset. You will continually see losses. You will continually see wins. But at the end of the day, it boils down to how you manage your emotions and how you manage your money. Now, recently, there was a hack that I did give to the trading community. For instance, if you have $1,000 in your account, well, let's make it 10 so that the numbers will be sizable enough. So let us assume that you have a $10,000 trading account. Based on who you are, you have $10,000 in your trading account. And by default, every trade you take is bound to have the risk of 1%, and 1% of $10,000 is $100. This is supposed to be your risk for every single trade that you take. However, there will be times in the market where you will see yourself go down. Now, of course, this is your lump sum capital. And going forward, I want to tell you that the moment you put this money into your account, your emotions immediately become very different. You become more emotionally attached to your money. You become, if you were trading on a demo account before, your psychology will immediately change because now you have your real money on the line. And if you have your real money on the line as a trader, you want to be as extremely careful as you can with your money. And for every single time you take a loss, there is an emotional, if you take an emotional hit, when you take a loss, the loss is not just happening on your account. The hit is not just happening on your account. It is also happening on your emotions, and it is happening on your psychology. And as long as you are taking these hits on your psychology and on your emotions, long term, it goes into your trading habit, it builds into your subconscious, and before you know it, you begin to do very irrational things. And these are the reasons why a lot of traders are not profitable. It is not that you're not capable of making sound decisions. It is not that something is wrong with your trading strategy. It is not that you're not good or you don't know technicals enough. It is just your mindset. Take a look at the trading world today, how much knowledge there is on YouTube, how many traders there are, thousands and thousands of traders teaching people how to trade. Yet, what is the numbers? The numbers are not changing. The numbers are not changing. You're still seeing more and more people losing money over time. And the main reason why people continually lose money in the business is because human nature, the very thing within your human nature that wants you to stay alive, that keeps you alive, is the very thing that will destroy you in the trading business. I'm going to give you an example. For instance, when you hear a gunshot, the natural instinct is to run away, is to probably look for somewhere to duck or, try to hide and get yourself to safety. And if someone on your neck throat, you are going to do everything you can to wriggle yourself out of that. That is natural human instinct. However, when it comes to the trading world, is what is going to hunt you down. So the ultimate thing you have to do is like someone trying to drown. If you are drowning and you struggle with the water, you try to quickly get out of the water as soon as you can by, maybe flapping your hands as fast as you can, your legs, you're going to drown definitely. However, if you're drowning and you try to stay as calm as possible, the chances of survival are instantly increased. That is the same thing that happens in this business. So first of all, you have $10,000 in your trading account. Now you have $100 somewhere here. Your risk per trade is $100. For every single time you take a loss, you have minus $100. And if, for instance, in a month, you have a risk of 5%, you don't want to risk more than 5% of this $10,000 in your account per month. That means regardless of how the market condition is, regardless of what is going on, you cannot lose $500 within a month. If you set these rules and abide by these rules, irrespective of what the market conditions are doing, you will not sink. You will not sink. Because the truth of the matter is this: market conditions, they happen this way. They go up, they go sideways, they go up, they go sideways, and they still go up. So in these windows, in these periods where the market is so uncertain, where we don't know what is going on, you want to make sure that you are not bleeding out. That is what this is all about. We are going to see very dangerous conditions. We're going to see the market, being in a lot of turmoil. But you want to be sure that when we have these kinds of situations, you're not losing everything you have. And the only way to not lose everything you have is to make sure that when you are in the river or when you are in the ocean and you're trying to drown, do not struggle. Do not try to revenge trade. Do not try to make back all the money you've lost at once. All of these things will come together and they will take you down. All of these things. These are the very things, like I said, it is the very things within human nature, that makes you want to stay alive, that keeps you fighting for your life. These are the very things that will work against you in the business of trading. So what you have to do to combat that, you must teach yourself to think differently. You must teach yourself to think like a trader. And one of the most difficult things that traders actually try to do is, and funny enough, we see people who try to do these things in their real lives. You are trying to control the market. How can you? It is impossible. Even your broker has no control of the market. The broker that a lot of people try to, they feel, oh, if you're not making money, oh, it's the no, it's not. The broker has no control. The broker is simply showing you the feed as they have received it. And it's up to you to do the business. For every single time you take a loss, you lose 1%. And you tell yourself, within every month, I must not lose 5% of my account. Within every month, I must not lose 5% of my account. On every trade, I must not lose more than 1% of my account. And if it happens to me that I take 1, 2, 3, 4 losses in a row, 3 losses in a row, I want to take a break and come back the following week or whenever it is my head is clear. I can tell you this, walking away from the chart is one of the most difficult things for traders to do. Most traders cannot walk away. Most traders cannot. Why? Because you have this money in your account. You are risking this per trade, on every single trade. This is all you have in a month. And somehow, if you manage to bring yourself to lose 3% within a week, you are going to be so messed up psychologically. And then you try to make back everything you've lost within a very short time. And this is where all the danger actually happens. And this is why I am appealing to you as a trader. You must learn within you to get rid of anything, any human nature that tells you, oh, it's time to fight. I want to make back that money. I just lost money. I need my money back. No, you don't need your money back. If you try to make it back as quickly as you lost it, I can assure you, you will lose this whole equity. So what is the best way to do business? The best way to do business is that for every single time that you put on risk in the market, you take a trade, you must make sure that your risk, that the reward that will accompany your risk is at least the same. You must make sure that for every single time you take a trade, no trade should ever make less than the original trade, than the original risk. No trade. That means if I risk $100 on a particular trade, it is a must that $100 must come back to me at the end of that trade. So I am risking $100 to make back another $100. This should be the minimum requirement. And one thing I've learned, I'm going to give you a particular instance that gave me a clue as to how to deal with risk to reward. And it's funny how people think risk to reward is applicable to everyday business. Some years ago, I used to sell cars. I used to work as a car salesman. And in those times when I was trying to sell cars, there was a particular instance where we tried to get a car for someone. And then when we went to the dealer shop, the dealer offered us the car for 1,820,000 Nigerian naira. So after the guy made the offer, and then he stood at 1,820,000 naira. Listen, at the time, I was still learning how to trade and I was still trying to do my other businesses. However, I had not come to grasp with certain things. And what I'm telling you is how I finally got my hands around risk to reward. So what the man said was that he will never, ever go below 1.820. And when we made an offer of 1.750, he refused. And when we were going home without getting the car, because the client's money obviously was not enough, I began to ask myself, isn't this what risk to reward is all about? He knows how much he has spent to get the car up to that point, from purchase to clearing at the wharf to maybe repairs, whatever. His reward must be intact. And this is exactly how traders must learn to see trading. You have to understand that for every single time you take a loss, you must treat these losses as business expenses. So the key is to make sure that whatever it is that comes into this business in form of reward is always bigger than the expense. So this is exactly how we teach CTA students to look at the market, because we know that our system wins more often than it loses. That means if we take 10 trades, we are likely to be right on at least 6 to 7 trades. That is what we mean by our system wins more than it loses. However, knowing fully well that our system wins more than it loses, the only way to stay profitable and actually make money is to stay with a minimum of this. Now, let me tell you something. The moment you are trading or you're in the business of trading, and then maybe you take 1 or 2 losses along the way and something goes wrong and you probably take a loss, there is a very high chance that your psychology could be messed up because you've taken 3 losses in a row, that by the time you get to the 3rd trade, if you see something that looks like this, you quickly snap off the profits. I don't know how many of you has ever had this experience. I mean, let me know if you've ever had such an experience in the comments. Because you've taken 1, 2, 3, 4 losses in a row, on your 4th trade, it happens to be a winning trade. You see the market going in your direction. Instead of allowing the system to do its job, instead of allowing the market to continue to trade till it hits full take profit, you quickly snap it off at this. So the question is, I mean, how many of you are falling for this? Just let me know. No shame. Of course, I did that before. If you ever do this, I can assure you it is going to be extremely difficult to make money in this business. It's going to be extremely difficult. Although, Joshua, I've been in that condition multiple times. Yeah. If you ever do this, it is going to be extremely difficult and near impossible to make money. Why? Because for every single time you take a trade and you lose 1%, you have to, because if you have a series of loss, if you have, let's say, -5 trades in a row, there is a very high chance that somewhere along the line, you are going to have +5 winning trades in a row. It is distribution of probabilities. Somewhere along the line, you're going to have this. So what happens when you have a series of 5 winning trades and it's minus $500, and then you have a series of 5 winning trades, 5 losing trades is minus $500, and then you have a series of 5 winning trades, and then it becomes minus $350. So your 5 losing trades, this is how it looks. A series of 5 losing trades looks like this. And then you come down to your series of 5 winning trades, and all you could get out of it was $350 because you were closing the trade halfway. And at the end of the day, what you are going to be left with is minus $150. This is not profitability. This is not how to be profitable in this business. You will never be. So this is why I'm telling you today that if you are going to do well in this business, you have to be prepared to do that difficult thing. And the most difficult things to do in this business is not learning how to read these charts. I can tell you, these charts are very easy to learn how to read. Very, very easy to learn how to read. Anyone can learn how to read these charts. But where the main difficult task comes in is in allowing the emotions within you to act against your feelings. However you're feeling as a trader, you must train your mind to act against those feelings. So for instance, I am down minus $100, down minus $500, and I see the next trade. I must take that next trade without fear, and I must take it with the same risk to reward. I must take it with the same risk measurement, irrespective of previous outcome. Because I know that in this business, previous outcome has no impact on future outcome. And then past performance does not also indicate what future performance is going to be. That is how this thing works. So I know, of course, I told you we're going to, if we do spot some live trades, I'll be more than happy to take any live trades. But as you can see, we're in a very, very messed up situation right now. You can see how all of this is looking. This was from yesterday's trade. So personally, if we are going to be taking any trades, remember that I just want to quickly show you this so that you can have an understanding of how we approach the market. So for instance, I want you to understand that, remember that what ultimately governs what we do in this business is higher time frame narrative. And as you can see, for several weeks, doesn't really matter, we're not looking at this side of the market, but for several weeks, take a look at this. Bearish price action. What this goes a long way to tell you is that if you are just if you had started selling now, at the end of each week, you just sell. The moment you have a new week, you sell. You would have made more money just selling than actually buying, because you have all of these candles here, and then you have several weeks of price action. Let's quickly count that starting from here. We count from here to here. We have 34 weeks, if I'm not mistaken, 34 weeks. And out of 34 weeks, how many positive weeks do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So out of 34 weeks, we had 14 bullish weeks, meaning we had 20 red days. Please, I want you to take a look at the example I'm giving you here. 20 bearish days and 14 bullish days. If you let me just show you how easy it is to just do this. If at the end of each week, by each week, you just come into a particular week and you risk $100 for the past 34 weeks, you just come in, your risk is $100. Please pay very good attention to this. Remember that what we have is 34 weeks, out of which we had 20 bearish days, bearish weeks, 20 bearish weeks, And then we had 14 bullish weeks. Remember that what we had to do is to trade with the underlying trend, which we have identified. So we have identified a bearish trend and we are trading with that. So this is how it looks. So let us assume that for every single time the market, you came into all this week, you identified the trend correctly, and all you did was just, if someone is asking a question, is $100 good enough to start trading? $100 is just for practice, actually. It's not really, I mean, you're only going to try to make money with $100. Even POS business, you don't start it with $100. So let us say for every single time you came in, you had to risk $20. So if you multiply 20 by 100, so that leaves us with $2,000, if I'm not mistaken. So you made plus, so we had a gain of plus $2,000. And then we subtract that from $1,400. $1,400. At the end of 20 weeks, assuming you just came in and you were risking, you probably don't even know how to trade. You don't know how to trade. You don't understand trading. You are just risking. You are just taking one-to-one. At the end, the net gain, the net return is how much? 2,000 minus 1,400. The net return will be equivalent to plus $600. But what if you had 20 bearish weeks and on the weeks you were winning, you were not taking $100 per trade? Let us now invert this, because I want to show you where the problem could be in your trading. Remember, this is me just giving you an example. So let us assume that here you are risking $100. The risk of $100 is the same. But let's assume you've taken some losses in a row and then somehow you have now become afraid. You've become afraid for whatever reason, and you had 20, excuse me, I don't know what this. You still had the same 20. Sorry about that. You still had the same 20 bearish weeks. You're still trading with the same strategy. However, you have now, for some reason, become afraid in your mind. You have become afraid in your mind. And for every single time you win, you quickly take off your trade at $70. So if you multiply $70 by that, you have 1,400. And for every single time you lost, well, you still lost the same thing. So here we are. You made nothing. You made nothing. So it is not about how many times you win. You could have 20 winning trades and one losing trade will take off all the profit. Please, this is how this business is done. So long term, you must make sure that within your psychology, within your mind is trained to accept that there will be losses along the way and that these things could happen. Your mind must accept that along the way, you could have 3-4 losses in a row. Any competent trader can take 3-4 losses in a row. But the question is, when you lose, how much do you lose? And when you win, how much have you made? This is exactly how this thing works. And I'm appealing to every single person that is in here today, learning all of this, paying attention to all of these things that we're teaching, to please apply these things. It is really, you are the only one that can simplify this journey for yourself. I can't simplify it for you. I cannot do the work for you, because at the end of the day, it all comes down to your mind. If you're risking $10 per trade, on your following trade, whenever you lose, you think about this thing as buying spare parts or buying any commodity, and whenever you want to sell, you sell it below the amount you bought it. That is simply the meaning of this thing. And when you want to sell, you always want to make sure that you sell for either you sell for the exact amount and sell more units, or you are selling for at least something slightly bigger. At least I showed you a trade here. Okay, I think I've deleted that. I showed you a trade where I would normally take a 1-to-1, but of course, this time around, I took at least a 2-to-1 and I made 4%. This is exactly how this thing works. This is the only way it can be done. No other way. No other way. So it does not matter. And this is where I want to quickly show you something. I want to quickly show you something on the risk to reward. Let me show you something on the risk to reward meter. The risk to reward ratio. Let me just show you how that works. Because we have come to a time where in the trading world, you will not even believe, okay, that's not. You will not even believe how many traders are struggling as a result of this. And for some reason, you think maybe it's the strategy, or you change your mentor, or you change your community, or you change whatever. It is not in the things you change. Whatever you have to change is within you. Can you all see the risk to reward meter? Can you guys see this? Can you please see this? Can you guys see this? Let me know. You can see it. All right, Malik can see it. All right, Ayiza, big shout out. All right, Zarhadin, you guys can see it. Very good, Joshua, thank you. So what this means, if for every single trade you take, you stop at a 1-to-1, for every single $100 you risk, you make back $100. You will need to have at least 60, you will need to be right 6 times out of 10 to be able to make money. And this is exactly why I want to tell you something. It is not about how many trades you lose does not matter in this business. It has nothing to do with profitability. There are traders that lose 70% of their trades and they still make money. I'm going to show you how. This is where I'm showing you that. If your trade, for every single time you risk $100, you insist, you set your take profit and your stop loss and you don't touch anything. Either way, the only way out of the trade is take profit or stop loss. 1 to 2 minimum. That is the minimum you are taking from the market. For every $100, I must either get $200 back or the market should take the $200. What that means is that if you lose 60% of your trades, you will make money. What does that mean? It means if you make 30%, if you have 20% win rate, no money, 30%, no money. If you can only win 4 trades out of 10, that is the meaning. If you can only win 4 trades out of 10 trades, using a risk to reward ratio of a minimum of 1 to 2, you will make money. You will. So let's not even talk about the 3-to-1. From 3-to-1s, if you lose 70% of your trades, you will still make money. If you have 20%, you're not going to make anything. But if for every single time you take a trade on the market, you insist that it's either take profit or stop loss with a 3-to-1 risk to reward, and you can only win 3 trades out of 10, you will make money. We are going to quickly go over and I will manually do the calculation for you to see. And for those of you, if you probably want this, I can maybe you can just go and you can see how I found it on the web, or if you want this particular one, I can maybe send it to you. I can send it to the private community later on, so you can have a look at that. Big shout out to Yuri Bishko who put this together. So that is how this thing works. So let me show you what that means. It means for every 10 trades, and you are using a 2-to-1 risk to reward. The reason I will use 2-to-1 as an example in this instance is something that, I mean, is close enough for it's easy to hit, because the farther the target, the more difficult it becomes for the market to hit it. All right. So for every 10 trades, let's assume you lose 5 of your trades and you're risking 1%. So of course, 5, you multiply that 5 by $100. You have, these are the losing trades now. You have minus $500. Minus $500. That is if you are using a 2-to-1 risk to reward system. And then on the other side, you win 5 of your trades, remember. And for every single reward, every single win, you must take home 2. What does that now leave you at? It leaves you, for every single trade, 5 times 2 leaves us at what? Please, guys, somebody tell me. Somebody tell me. Leaves us at $1,000. So if we subtract $5,000, sorry, $1,000, we subtract the 500 you lost. Remember, think about this as income and expenses. If we subtract the $500 loss from this, what we have is net positive $500. We put the plus in front. Now, can you tell me, can you now see that it is not in the trading system? That is not where the problem is. It is not in the mentor. It is not in the broker. It is not in whatever. Majority of people who are traders have the most difficult time ever sticking to this. If you tell a student to stick to this, by the time he takes 1 or 2 losses, his psychology is all over the place. His emotion is all over the place. He's afraid. Begins to think about different things. What if this one goes back? You see the market, probably the stake profit is somewhere. You see the market, it comes, and then he goes back and he probably hits your stop loss on there. Like, ooh. When I was coming up those days, I mean, I'm still coming up. I'm not where I used to be anyway, but let's just say we're permanent students of the market. I saw a trader. He had a 1-to-4 risk to reward ratio, 1-to-4. And the market this was a take profit, something like this. The market was this close to it and turned around. Do you know that this man did not close that trade? He said he does not touch his trades. The moment he places it, that is it. And that is the highest level of release you can give to the market. You are not attached to the outcome. Just take the trade and leave it the hell alone. 2-to-1. I can tell you that the most profitable thing you can do for yourself, go home and try this for the next 6 months. The most profitable thing you can try for yourself is have a fixed risk to reward system. Set your stop loss, set your take profit, and go away. Because I can assure you the problem is people micromanage trades a lot. If you always look at your chart, always bring out your phone to check this and that, all those things, I can assure you before you know it, you will touch something, you will close the trade, you will panic, whatever the hell. Have a consistent risk of maybe 1 or 2%. Have a consistent reward of maybe the same 1.5 or the same 2-to-1. Just be consistent. That is the meaning of consistency in trading. Not today you are risking 1%, tomorrow you are risking another thing, depending on how you feel. It is 1% risk, regardless of the situation. It is 2-to-1 reward, regardless of the situation. That is how you make money, irrespective of what the market is doing or saying. It's not when the market goes into this type of phase, where all of this is happening, that is, you probably now become afraid and you're now closing out at the 1-to-1, you're closing out. The market will definitely hit phases where the 2-to-1s are not hitting. Who cares? It will come and go. And guess what? We'll eventually get back into these phases. Every CTA student knows that in this place that they have an entry. They know. So for instance, you have an entry here, you probably took some losses somewhere along the line, and you get your entry here. CTA 101. It eventually comes along. Just place the trade and leave it the hell alone. Don't touch, don't monitor, don't check. You probably, what I normally do is I would set an alert at my take profit level. Somewhere there, I would just set an alert there. So when the market hits the take profit, I get a notification on TradingView. I'll set an alert on my stop loss as well. The market hits my stop loss. Oh man, okay, I got stopped out. Well, it's what it is. It is the business. Everybody gets stopped out in this business. I don't care how long you trade. I don't care how good you think you are. Set it and leave it alone. This is exactly why traders are not making money. It is difficult to make money if you do these things. If, for instance, you're trading a 2-to-1, today you risk 3%, tomorrow you risk 4%. Tell them Chikwado said you can't make money that way. It is impossible. You can't. So if this is the business you aim to do, if this is the business you aim to take full time, I have just shown you a very quiet blueprint here. Just take a look at this, 10 trades. In fact, just do this assignment, take it home and do it on 10 trades. The current system that you're trading, if you're sure you backtested the system, go into your chart and backtest the system for a 2-to-1 risk to reward. And this goes out to all CTA students as well. Take home a 2-to-1 system. Take out a minimum of 2-to-1. For every single time I risk $10, $20 must come back. Because the truth is, if you're going to do this business, in any business under the sun, the key to longevity is that income must be higher than expenses. And in this trading business, the losses we take, because we don't have shop, we don't have rent, we are paying on the internet and all these things, the losses we take are our expenses. So as a trader, for every single time you take a trade, if the risk is $10, the reward must be $20. If it is not $20, if you look at the trade, for instance, if you, let's say your entry is here. I mean, I've already seen a CTA style entry. Let's say you are getting in at this liquidity here, this run. If you are getting in at this run here, if this is your run, this is your entry, CTA, student. If this is your entry, your stop loss is 25 pips, it's above that place. If you don't have room to the low or to wherever for at least a 2-to-1, leave the trade alone, you don't take it. That means risk to reward must be considered in qualifying a trade. Risk to reward must be considered in qualifying any trade. So if we don't get a 2-to-1, we don't take the trade. If we're in here and the market is looking all squishy and all those kind of things, I think in this place there's an entry here. I think there's an entry up there, right? There's an entry there, and you can't see this until lower time frames. Stop loss above the high. If there is no 2-to-1, there is no trade. Guys, please, if there is no 2-to-1, we don't take the trade. There are traders that take a minimum of a 3-to-1, but I've shown you what you can do just with a 2-to-1. Can you see how if you stick to risk, if you stick to this in very trying market conditions, in difficult market conditions, irrespective of how it is, the market will not swallow you. And there are weeks you come into the market. For instance, this week, I've only taken one trade. I only took one trade on USD Swiss franc. I think I did try to take a trade on USD JPY that stopped me out for a -1%. So now I'm standing at 3% for the week. That was a very annoying trade. This one was one trade that, of course, I think this was the trade that I got stopped out of. I didn't really get stopped out, but I noticed that the market wasn't giving me what I wanted, and ultimately I had to close it out somewhere around here. I think it was somewhere around here that I got out of trade. It was around 15 pips of stop loss. So I got out of trade, walked away with 1% loss, and that was it. Something like that, 15%. I was aiming for a 30. Fortunately, that didn't come, and it is what it is. So that's how it looks. So that one is not, I'll now show you, oh, no, I did not take a loss. No, I took a loss. It happened. Look at it here. I'll now go and stretch it above and say, oh, no, I did not take a loss. So what am I trying to show you? I simply want to show you the real way that this can be done. With peace of mind, with mental clarity, with zero stress. 2-to-1, irrespective of market condition, you will fare better. The reason I thought my students would take a 1-to-1 at the beginning, the reason I taught them how to take a one-to-one at the beginning was so that, because one-to-ones give you more wins, and you need more wins to feel confident in the market. But now it's time to make money. You need to see winning trades to make money. You need to see one-to-ones. You need to see these kind of situations for you to be able to at least make money. For you to be able to have confidence like, okay, yeah, this system works. We take out a one-to-one, yes. But now it is time to actually go in and make bank. You have to take home something. This is it. You don't judge yourself for any individual trade. You don't judge yourself for one trade. Oh, this one trade went bad. No. And I want you to know something. When we have 10 trades, we don't know the sequence of the wins and losses. Please take note. If we have 10 trades, if I put down 10 trade, win, loss, loss, win, win, loss, loss, win, loss, 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 win, win, win. We don't know the sequence of occurrence. Nobody knows. We can't tell that. So since we don't know the sequence of this, of the 10 trades, how it will be, we're going to make money 10 trades at a time. Since we don't know the sequence of occurrence of these 10 trades, the only thing we know is that the constant figure in the entire thing is our risk to reward. For every single time we take a risk, we risk 1%, for the return must be 2%. We said to take profit, stop loss, and we leave it the hell alone. So if we are going to face a three-win winning streak, good and fine. If we're going to face a 3 losing streak, that is fine as well. The most important thing is follow the plan. Just follow the plan, guys. Just follow the plan. Just follow the plan. Think another CTA style entry somewhere here. At this point, if you had gotten into this trade, you wouldn't have been out. You would have been out for your one-to-one at some point. If you had gotten into there, you would still be, the market will still be dragging you around. If you are in this for a 20 pip stop loss, the market will still be dragging you like an old generator and all that. But for a one-to-one, you would not even be out for a one-to-one. So you have to endure and go through this and allow the market to do its thing. Don't touch it. Don't fiddle with it. Don't play around with it. Just leave it alone. Please leave it alone. I know it's difficult, but it can be done. So now I'm going to take in a few questions. If you have questions, please, now is the time. Drop your questions. I'll be more than happy to begin to attend to these questions. And let's see how far we can get. All right. So please, if you have any questions so far, drop your questions. I'll be more than happy. The markets are slow today. No trading setup. Only managed to find one within the week. And this is how this is just looking right now. So you can see how we found this entry, this high. The market took it. We got the sell-off. So we have a question. Please, can you go over fair value gap again? Okay, fair value gap. All right. So I'm going to go over fair value gap. So the fair value gap, for instance, is here. Let us pick this candle as our instance. And what we have is this low here. We have a candle to the left, right? We have a candle to the left. This candle, remember, we're counting 1, 2, 3 candles. And then here, this high. If this price action had not happened, this is really getting in my way. If all of this had not happened, all of this price action had not happened, this from between this last low of this candle, the one before this, between this low here and the high of this other candle that has not gone up to overlap this other candle, because you can see this candle is just empty. This space from up between here, that is where the fair value gap is. So let me take out all the, I think my trading view has expired. Oh man, my trading view has expired. Okay, can't make payment for that now. So, but unfortunately, that is what this means actually. My trading view has expired yesterday. I have to make payment for that later today. So this here, if all this had not happened, this is the fair value gap. And in this particular market, this is a market that is completely balanced. So in this particular instance, what we have, the current fair value gap in this market is here. Or imbalance is here. So let us see. I don't think the market has, okay, so the market has not traded into this high yet. So if you notice, when the market sold off, this candle dropped off here. No price, the wicks, the price has not traded back to cover all of this space, because when the market drops this is imbalance. The market does not move like this. The market would eventually go up to fill up all these areas. That's how the market works. So we drop down, we create this imbalance, we go back up, the market has to overlap it to the other side. When this one was going up, it left all of this gap. This market eventually traded down to cover this. So in this particular instance, we have traded up, closed up all of this fair value gap, and then this one traded up, didn't quite close this one. So what do we have? We still have this space between here and here. This is where the fair value gap is. This is the fair value gap. So between this low of this candle and the high of this candle on the body of this one, there is no space here. The market has not traded in yet. So this is where the fair value gap is. I don't know if that gives you, if that clarifies you. All right, I took a trade on gold. My TP is almost hit. This is the best strategy. Thank you so much for that. Ifeanyi, one of the most outstanding students I've produced at CTA. Very, very proud. So you can see as well, I think this would have been the high. This is the high. Yeah, so that's the high. This will be the entry. Of course, you take that on the 1 hour, probably, if that's where you took that trade. Take a look at that. So the market comes, hits this and drops. It's not an accident that the market went there. And when the market comes and hits this low, it is not an accident that is rejecting and moving higher. It is not an accident. It is the orders in there that are doing all of those things. All right. How can I join CTA? You can join CTA since you've already signed up with Tickmill. Just make a deposit into your trading account and then send us a message on Instagram, and then somebody will add you to the community as well. And of course, when you send us a message, send us your email that you used to sign up with Tickmill. So my name on Instagram, I know you're going to say, oh, yes, giving us 3 different names over the past, I mean, I'm just trying to find me on Instagram. Just type Hosanna Chikwaddo, that's all. It's going to give you me. You type my name on Instagram, you will be able to reach out to me on Instagram. All right. So that's how you join. So in this instance, for the Ono is asking about where the fair value gap is. So in this particular instance, in this candle now, you have this low. You can see how this candle moved up, but no price has come to trade into this space here yet. So the fair value gap is between this low and the high of this candle. So this space here is the fair value gap. So this space is the fair value gap. So this is where the fair value gap is, because price has not traded into this. And in this particular instance, we have another fair value gap in here. So these are the fair value gaps. The market has not traded into all these areas just yet. You can see how these candles are just free by themselves. No price has traded into them just yet. So those are the fair value gaps in the market. Can we still find liquidity on lower time frame, even though we have seen it on higher time frame? Absolutely, liquidity is everywhere, everywhere, everywhere. You can find liquidity on any time frame, and you know, you can find it even if you go on 5-minute chart. You can see how this one, in fact, this particular trade would have even been best taken on a 5-minute chart. You see how this same liquidity that we saw on the 1 hour, this is it here. If we go further, look at that. It is not an accident that the market traded above this low and sold off. Take a look at that. Remember, 2 to 1. Let's say we get in with 500 pips. 2 to 1. I said, this is on the 5-minute chart. And this thing is everywhere you look. Trust me, everywhere you look. I think this is a low itself. This is liquidity. This is a 5-minute liquidity. Did we hit it? So we came right here. Okay, these guys have started showing me as reminded me that my My data, my subscription has finished. So here you can see how we tap this and we go. It is not an accident that these things are happening. It's not anything like an accident, nothing like that, nothing of such. The market knows exactly what it's doing and it knows where it's going. Even on lower time frames, take a look at this here. 5-minute chart. We tap this, we sell off. Can you see it? See that? See this high? We create that high and there's a sell-off. And even in here, we create this high, we tap it, there's a sell-off. I can't even show you this thing enough. Just go look for it yourself. And the ultimate thing you will do is to trust the system and apply the risk to reward measures that we just taught you. Trade this way, irrespective of market conditions, irrespective of how you're feeling. The greatest thing you'll be combating or you'll be dealing with is your emotions. By the time you take 1, 2, 3 losses in a row, and then your mind is telling you, the crazy thing is you have to now still go back and take that same trade with the same setup that just lost you money. You have to go back and take that same trade. That is what this business is all about. So you must build such strong mental capacity that these things don't faze you. You don't even, you know it's going to happen. You know it's part of the business, but you don't care regardless. You just do your thing, right? You just do your thing. So I think at this point, we've gradually come to the end of the webinar. Next week, we're going to go through another set of live trading together. Please, those of you that have not funded your account, fund your account. Next week, we are going to go live. We're going to trade live again like we did last week. This week has been talking about mindset. Next week, we're going to take a trade on live together. I'm new here. Please, how can I learn your strategy? You can learn your strategy by joining our Chikoro Trading Academy community. That is where you learn our strategy, all right? That is where you learn our system. That's where you learn how to trade the way we trade, all right? So that is how it is going to be. So please, next week, Wednesday is going to be 12th of July. Next week, Wednesday is going to be 12th of July. We are going to come together and kill it again. We are going this time around. Unfortunately, today, no trading setups. That's completely fine. It's not every day. I mean, this week, like I said, I already had one this week. But I'd love to get some more trades. But you know, I'm not really in control of the market. No one is. All right. So this is literally what we've been dealing with, and where you can see where we are not just trading within a trending market or within a trending situation. The market is completely ranging, but we are still trading and making money as a community. We are still trading. So what this means is our system works in ranging markets and trending market. We are everywhere. We can trade. And then this particular one, it was in a tight range. I got this trade yesterday and I got out. That is to tell you how we trade. Is not, that's why I said you have to learn how to. Can you message me on IG? Absolutely, you can message me on IG. Hosanna Chikoro, just type my name on Instagram. It's better and faster for me to reply over there, right? So this is how we trade, irrespective of market conditions, whether the market is giving us very big trending moves or it's giving us these types of situations, we are in the game. So this is actually how we look at the market. This is how we approach the market. And remember, it is not the strategy that will make you money. It is how you apply it. It is how you approach the business. That is the ultimate thing that will make you money. All right. So please, I look forward to seeing you all next week, Wednesday. We're going to do some live trading. Thankfully, Wednesday is a great day. And any trade that I do take along the way, within next week, within this week, of course, they will all be documented and the lessons will be shared with you. As you can see, I don't have anything to hide. I'm not, hiding this and showing you this and not showing you that one and telling you about one secret candle. There is no secret. Everything is here. It is just up to you. Take it home, go home and replicate it, and then use your mindset to follow it up. At the end of the day, it is all in your mind. If you don't believe this is going to work for you, there is no way it will ever work for you. It doesn't matter who teaches you, right? You have to believe very strongly in what you're doing, and it will ultimately make sense at the end of the day. And also, for next week, if you have any suggestions, if you have any pairs that you would like me to look at, send it to me on Instagram. That is because next week is going to be the final episode of this particular webinar series. It's a 4-part webinar series. It's been very lovely. It's been very nice, having to, interact with all you guys. So please, next week, between now and next week, if you want me to analyze any pair in the coming week, please do send me a message. Send it to me on Instagram, and I'll be happy to get back at you. If Ifeanyi is raising his hand. So please send it to me on Instagram, and I'll be happy to analyze the pair. And of course, the analysis will be shared here. So if you want to watch how I trade, how I analyze, if we can get an entry on a pair that you request, please send me the pair request, not prayer request, please send me the pair request on Instagram, and we'll look at it together next week and hopefully trade it together as well. So until I see you next week, okay, I'm new to strategy. How much should I fund your account with? Minimum is $100, but to join our community, Tickmill requires a minimum of $100, but to be part of our community and part of our learning, we require that you put in $200 into your Tickmill account so that you can join our community and see all that we are doing. All right. So thank you very much, all of you, for being part of our, of our program, of our webinar. Can't wait to see you all next week. And until then, please practice. I've shown you how I trade, how I look at the market many times. Over and over, I've shown you this. So please just go home, back test, go home, and make sure you practice. And I wish you all very good luck and good trading. Cheers. I think there's someone. You hardly respond to messages on Instagram. Well, I do. Don't worry. I have a new personal assistant. So he's definitely going to be catching up with all the messages. All right. So please just don't worry. I have a personal assistant now. He's definitely going to have access to my personal Instagram, and he's going to respond to all the messages, because a lot of times I'm not able to catch up with even WhatsApp messages and everything. I'm not able to catch up with everything. But going forward, of course, all those things have now been taken care of. All right. So cheers and God bless. For those of you who want the recorded version, I think you might want to check your email. Just refresh your email. We can get you the recorded version as well. Just check your emails. All right. Bye-bye.